welcome to Mint Stocks. I'm Andy Hodges. Today we're going to cover two critical issues. The first issue will be about the different types of stocks or stocks that you can buy and invest in. The second issue will be about the different classes of stocks that the Zimbabwe Stock Exchange classes individual companies into. We're going to start from the beginning. So, when a company is first founded, the only shareholders are normally the co-founders and early investors. For example, if a startup has two founders and one investor, each may own 33 1/3 of the company's shares. However, as the company grows and needs more capital to expand, it may issue more of its shares to other investors, so that the original founders end up with less percentage or less shares in their company. During this stage, the company and its shares are considered private. That's very important. This is now a private business, and in most cases, private shares are not easily exchanged, and the number of shareholders is typically very small. But as a company continues to grow, it wants to expand and control the world. There comes a point where early investors become eager to sell their shares and monetize their profits, or the company needs to issue more shares to get more investors into it. So, the company then would consider something called an initial public offering, or an IPO, transforming it from a private to a public company. Aside from the private-public distinction, there are also two types of stocks that companies can issue. The first one is common stock, and the second is preferred stock. I'm now going to tell you the different types of stocks that investors like to invest in. Don't worry about it, we'll explain them in our shows later. Most investors choose to invest in common stock instead of preferred stock. The growth and loss potential is much higher. Huge companies are sometimes referred to on the bourse as blue chip. They often pay steady dividends and have less growth potential. Income stocks provide investors with steady dividend payments. Value stocks have good fundamental valuations and often pay dividends. They have outperformed growth stocks over the last few decades, which may or may not be a result of increased risk. Growth stocks are generally more volatile and tied to economic cycles. They often outrun the underlying company earnings, which results in a price correction later on. Small cap stocks have outperformed large cap stocks in recent history, but do involve more risk. As I said, don't worry. We're going to explain these in way more detail in our future programs. Now, the Zimbabwe Stock Exchange does something quite interesting that most stock exchanges around the world do. They put their stocks or class them into different sectors. And we're going to explore the 10 different sectors that the Zimbabwe Stock Exchange puts their companies into throughout the season of Mint Stocks. This is what they are. Financials, most of those are banking and finance, insurance companies, etc. Utilities, oil and gas, water companies. Consumer discretionary, consumer staples, energy, healthcare, industrials, technology, telecom, and materials. We're going to go through, as I said, each of these sectors in detail. So, in our next episode of Mint Stocks, we're going to explore agro listings on the Zimbabwe Stock Exchange. Of course, agriculture is close to all of our hearts. Zimbabwe is an agro-based economy, so therefore we're going to start with agro listings. It seems that you're always late to the party when the market is swinging. It's because other investors are beating you to the news. So, you want to stay ahead of the pack, you want to get the latest insights and analysis. Be sure not to miss Mint Stocks every Thursday on ZTN at 6 p.m. All that's left for me to do is to wish you a Merry Christmas and a Happy New Year. But more importantly, be safe out there and be blessed. Goodbye.